day.
There's apples under pressure.
You buy stocks on Tuesday and sell them on Friday.
The market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.
This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com. Hello guys and welcome to Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. Just before I start today's video, anyone who's interested in joining my signal service, then please do not hesitate to visit my website dailymarketmovements.com. I charge a very small joining fee of $29.99. But let's have a look at the S&P 500 futures chart. Today we have started the day slightly positive, up around 0.27%. Of course, it's still a long way to go until the US market opens. But, the market has done exactly what I had forecasted it to do last week. I said that we were well overbought on the RSI. I think the RSI really was up around 73. There we go. 73.38, and I said that we were needing a nice little correction here, just to take the froth off this market, and that's exactly what happened. I said that I'm a buyer from the 200-day EMA all the way to the bottom of this red box, and where are we trading? Right at the bottom of this red box. So I have now gone ahead and bought this market. I think the first target becomes 4,220. If we break above there, we then go and target the highs. If we break above 4,330, which of course are the swing highs here, then that really does open up the door to much higher prices, potentially all the way up to around 4,500. That's where we've seen some noise in the past. Of course, all eyes are going to be on Jackson Hole later on this week. If the Fed comes out any more hawkish, then of course you could potentially see the market sell off a little bit further towards the downside. But vice versa, if the Fed comes out and sounds a little bit more dovish, then we could see that being a catalyst for the markets to trade a lot higher. So I'm optimistic here. Of course, last week we've clawed back 50% of the losses overall for the year, and historically speaking, that means that the lows are in. So I flipped from being bearish to bullish last week. And also, one very interesting stat that I want to share with you all is that we're currently trading in a midterm election year, and there's been 20 midterm election years dating back to 1939. So that's the start of World War II, and 100% of the time from Q2 going into from Q3, which is going to happen on the 1st of October, going into Q2 next year, the return has been positive 100% of the time. So that means from October 1st this year going all the way through to June 1st next year. So that will be at the beginning of Q2, June 1st, 2023. History would suggest that the market is going to be positive. And also another interesting fact is that 6 of those 20 years the market has returned over 20%. So some very interesting facts there going into especially into the winter months when the midterm elections take place. So I'm bullish here, no interest in selling at this moment in time.
There's apples under pressure.
You buy stocks on Tuesday and sell them on Friday.
The market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.